Good evening, everyone. Hello and welcome to the special show GST and You. I'm Avan Dabash. This is a show which is dedicated to you, the viewer. So if you have any questions, do you have any queries on GST, the implications that it has on your business, on individual items as well, or do you simply have any comments? There's a number that's flashing at the bottom of your screens and we'd love to hear you out. Let's introduce our guests who will be with us, guiding us over the next half hour. Abhishek, Rastogi, partner, Khaitan and company. Good evening, Abhishek. Great to have you with us. What a hectic Saturday it was with all the revisions coming about. You know, a lot of slabs have been cut and there was absolute bonanza on the Lal Street as well being seen on the back of this, especially for the consumer appliance sector, footwear, paints, etc. All in all, after having a look at it, just from a consumer point of view, how would you rate the kind of GST tweak that has been made? Because it's the biggest since its implementation. And how much of a positive is it for customers?
See, I think as far as the customer is concerned, I think it's a great time. They would certainly get a lot of benefit out of these reductions. And believe me or not, there were a lot of supplies which were taxed at a much higher rate of 28%. A lot of recommendations had gone to the government with respect to reduction on a lot of these items consumed by a massive population falling within the middle class. So I think from that perspective, this rate reduction has come on time. There are a lot of number crunching which is happening, that what would be the revenue impact on a yearly basis, and some estimates are saying that the revenue impact could be from 12,000 crores to 15,000 crores. But I think I would look at very pragmatically. If you see the reduction in these tax rates, and a lot of these are popular measures, we should not we should not be shy to acknowledge that. But I think it's a good move of the government. Reduction of a lot of these rates from 28% to 18%. Believe me or not, price elasticity of demand would come into force. The demand is expected to increase, and hence there would be a lot of other repercussions in terms of job creation, collections of the direct tax side, and so on and so forth. So overall, I think it's a great thing to happen with such a massive reduction on number of items. The most important thing which I would watch very closely in the days to come is that how these companies pass on this rate reduction benefit to the consumers. And I think the anti-profiteering authority at this junction has a very important role to play, because ultimately the government has done its part to reduce taxes on such a large number of items, but the benefit in terms of the reduction of the prices has to go to the ultimate consumer. And I think both the government and the anti-profiteering authorities would be looking such companies very, very closely.
Yeah, absolutely. You know, particularly for the consumer durables companies, because remember, Abhishek, they were in the highest tax bracket, which was 28%. And now with that tweak having come into about 18%, we are definitely going to see most of these companies go ahead and pass on the benefits to the customers. And that's what they've hinted to us as well in our interactions with them. But then we have, it's some exclusive news that after, on the heels of this GST rate revision, we understand that the government is going to consider hiking the import duty on goods like TVs, refrigerators, and this is in order to create a level playing field for the domestic manufacturers. How are you reading into this move then coming about? Because they believe that, you know, they have assured the GST Council on these import duty hikes, and they believe that it will help the manufacturers against the international competition. Okay, we seem to have disconnected that feed. We'll just be reconnecting right back. But do remember, just a short while ago, you heard my colleague Rituparna Nath giving us that exclusive information. The government may be hiking the duty on refrigerators, TVs, washing machines, shoes and leather goods. And they believe that this move is going to help the manufacturers against the international competition. So Abhishek, if you heard me, this move to hike the import duty on some of these goods, how are you reading into this move? Would it really be counterproductive for the customers?
See, I think let's be very clear. The vision of the government is very clear, to have Make in India. the endeavor of the government is right to increase the manufacturing base in India. Whether we have seen a lot of these initiatives which have happened, and as very recent, this mobile manufacturing company was inaugurated. So I think the endeavor is very clear to make in India. The consumption, if it happens in India, whether export happens or not, for whatever item being consumed in India, the endeavor is that the Make in India campaign should have all the points in favor of it. Now, coming to your question of the customs duty implications or the increase in the customs duty rate, I think till the time we are within the permissible WTO limits, we are not crossing those boundaries of the WTO permissible limits, and we are increasing the customs duty, the basic customs duty on a lot of these items. I think it is absolutely fine, because if you see this entire trade war going between the US, China, and a lot of other countries, till the time they are increasing the customs duty within the permissible limits, India does the same thing by increasing the customs duty but being within the permissible limits. I think there is nothing wrong in that, because at the end of the day, what you're saying is that we want to encourage the domestic players. We want to encourage the manufacturing to happen in India. At the same time, we are not saying that we are exorbitantly increasing the customs duty. We are within the trade barrier limitation or the WTO guidelines. And if we do that, then I think, because at the end of the day, let's appreciate that the government would want to have the revenue as well. And there are a lot of infrastructure projects, other projects, which needs to be completed by 2019. And the revenue is a necessity. But yes, from which transaction the revenue gets collected now, I think customs looks like a favorable.
Okay, Abhishek, allow me to come in here because I want to squeeze in as many queries as we can. We'll talk about the overall revenue collection as well. First up, a question been sent in to us from Rohan Shukla. He says, how much will the prices of white goods reduce post the GST revision? Will the cuts actually be passed on to the customer? So this is something that we were talking about. They were in the highest tax slab. That's definitely been reduced. How exactly would you like to answer Rohan's questions? And if you, the viewer, have any questions, please dial in. Abhishek, go ahead.
So Rohan, I think you have raised a very valid question, because at the end of the day, the reduction of the taxes by the government and a lot of these announcements have to actually result into the benefit flowing on to the customer. So Rohan, like you, there will be a lot of people who will have this apprehension whether the companies would pass on this benefit of reduction of the tax on the output side. What I want to convey through ET now to you, Rohan, is that in case you feel that there is any business which is not passing on the benefit of the reduction of the taxes, then there are anti-profiteering authorities. You should write to the anti-profiteering authorities. You should write to these companies. You should compare the prices pre the reduction era and in the new regime. 27th of July is the cutoff date which has been announced. So most of these taxes would be reduced with effect from 27th of July. I think you should be aware of the law to go to anti-profiting authorities and invoke section 171 of the CGST Act in case these benefits are not coming to you.
All right, I hope that cleared out your question. And if you have any queries or simply just a comment on what you make of the GST tweak revisions on different categories, please feel free to dial in. Abhishek, let's get on board our next query, which has been sent in by Radhika. This is a valid one because I think there's a little bit of ambiguity on this. She says sanitary napkins have been exempted from the tax. It was earlier 12%, now it's nil. But will the manufacturers actually pass on the entire gain to customers? I understand that a lot of these, manufacturers will have no choice but to pass on the entire gain. But the question is, will we get the entire benefit of this?
So Radhika, again, sanitary napkins have been the subject matter of a lot of debate. When I was speaking on few channels last week, we were thinking that the rate would go down from 12% to 5%. It was not anticipated that the rate would go down from 12% to exempted. Technically, there is a problem if there is an exemption. If the rate would have been 5%, I could have told you that invoking the anti-profiteering mechanism, the benefit would have gone to the consumer for sure, because in that scenario, not only there would have been a rate reduction, but there would have also been refund to the manufacturers, because the inverted duty structure refund is available when there are taxable supplies. Now what has happened is that this supply has become exempted, which means that a lot of these inputs and input services which go into the production of this sanitary napkin becomes a cost to the manufacturer. They will not be able to offset those costs. Believe me or not, there are some high input costs which are applicable to this sort of business. So from that perspective, there would be some amount which would remain as a tax input cost to the manufacturer, and hence the reduction which would have otherwise come in case it would have become 5% would have been more easy to compute, would have been more easy to pass on. So I think there is a slight challenge in terms of the reduction, but having said that, because the rate has come down from 12% to exempt category, there has to certainly be some benefit flowing to the consumer.
All right, I hope we were able to give you that clarity with respect to sanitary napkins and what the actual implication is on you, the end user. On that note, let's take a quick break, and to the viewers who are watching, if you have any queries, if you have any comments on GST and the tweaks that have been made, feel free to dial into us. Abhishek Rastogi is with us on the GST special. GST and you, come right back. Welcome back. This is GST and You, a special show that we have. The GST rate revisions took place this weekend, and we want to know, do you have any questions? Do you have any queries or comments? And how is this going to impact your life? Abhishek Rastogi, partner Khaitan and Company, is with us on the show. Abhishek, let's get on board. Then the next, before we get on board the next query, I just want to, understand from you what is going to happen to the overall revenue shortfall. We understand that this could definitely be impacted to the tune of about 6,300 crore rupees. How are you reading into the overall imbalance now with revenues on the back of the kind of tweaks that have been taken?
See, I think my estimation is that while there are different numbers which are coming up, the revenue authorities are estimating a number of 12,000 to 15,000 crores over a year. There are other figures which are coming to about 6,300 crores and so on and so forth. But I think my estimate is that one, whether this move was essential. And I think from that perspective, this move was essential because the trimming down of the category at 28% had to happen. So I think the government has taken a very bold step to reduce and trim down that list of 28%. That's for sure, which has happened. Now, how much will it impact in terms of the overall revenue? That remains the moot point now. Now, assuming that, this cut reduces to the extent of, let's say, 6,300 crores. Now, what will happen because of the rate reduction is that most of these products are within that purview of elasticity of demand, wherein the elasticity of demand will come into play because the demand and supply economics would now mean that the greater demand of these products are reaching and a lot of these consumers would now be more happy to buy these products. So which means that the quantum of loss to the exchequer would be settled off to a very large extent by the increased demand. That is one. Secondly, what will happen is it leads to job creations as well, because the moment the manufacturing grows, there would be job creation not only in the manufacturing sector but also in the after sales service, showrooms, etc., so on and so forth. So which means that there is job creation. When there is a reduction in the prices and hence the turnover increases, the overall profitability of any company, be it the manufacturing company or the service company or after sales service company or these showrooms, etc., the traders, etc., would also increase. So which means that there would be an improved collection on the direct tax side. So I think keeping the holistic figure in mind, I think we cannot do 2 plus 2 here because 2 plus 2 may not be the correct computation when it comes to the entire number game as far as the revenue to the government is concerned. So I am very positive, I am very optimistic about this reduction. A lot of these items at 28% were at a very exorbitant tax rate. So I think the government has taken the bold step. To me, I think what the government should do as far as the rate rationalization is concerned is to
Yeah.
merge somewhere the 12 and the 18%
Yes,
category.
that has definitely been a call,
Trim down
that the
28%.
industry has been batting for. Abhishek, I'm cutting you short because we have some live callers now. So we'll connect with Mr. Pillai. He's joining us from Kerala. I believe, sir, you have some comments on the GST rate revision. Go ahead.
Comment here because actually the thing is that I think I am more of a macro geek, and in which I make calculation. I think that the government's GST collection is going to improve by about 18% to about 13 lakh crores this financial year, and of course the job creation will be increasing by 12%, and actually. More of the excise duty will be collected more than 23% also within the second half of this financial year. That's what I think so.
So, Mr. Pillai, you're hailing this move as a big positive?
I think the government's revenue will be increasing, the job will be increasing, and Indian manufacturers have a big shot in the arm. They can increase the price, they can reduce the price even lower than the GST rate that reductions that they got, and cutthroat competition against the Chinese products. And they got an opportunity here. I think so.
Okay, thanks so much for sharing with us your thoughts. And like Mr. Pillai, if you have any comments, if you have any questions, Abhishek Rastogi is with us. Feel free to dial in. In fact, let's get in Arjun Raje's question. And he says, can you tell me what is the impact of the GST rate revision on MSMEs? Will the new norms make it easier for MSMEs to do business? We've not really touched upon this. And I believe that this is going to be definitely a big booster for MSMEs. How so, Abhishek?
So I think one thing is very clear, that the government wants to give these benefits to MSME sector, and that is very, very clearly evident from the limit which has been increased to 5 crores with respect to the returns. So the government wants that this ease of compliance should come to the MSME sector. MSME sector was more struggling with reference to a lot of these compliances. So which has now become quarterly. The tax payment remains monthly, but the compliance becomes quarterly. So from that perspective, I think the government has done for MSME sector. That's the first thing. The composition scheme limit also has been tweaked to give the benefit to the extent of 1.5 crores. So from that perspective also there would be a benefit which would come in. And mind you that a lot of these rate reductions, when it happens, the maximum benefit which goes is also to the MSME sector, and there are few other provisions such as procurement of goods or services from unregistered person, and those were applicable under reverse charge. So from that perspective also the government has extended the date till September of 2019, not 18, 2019. So from that perspective also a lot of benefit will come to the medium and small scale enterprises.
Okay, lots of advantages for medium and small scale enterprises. Kunal has sent us a question as well. He asks, what are the structural changes for firms on filing tax returns? So he asks, what are the rules for firms with sales of less than 5 crore rupees? What will be the GST rate revision impact on such small firms? Abhishek, if you could just give us more clarity to Kunal.
So Kunal, yes, I just mentioned that with respect to the return filing, the return has become quarterly for people who do not cross the turnover limit of 5 crores. So monthly returns was becoming a big problem for a lot of these enterprises. So which has been acknowledged by the government and which has been addressed by increasing this limit for quarterly returns when the turnover does not cross 5 crores. So from that perspective of compliance, they are better off now after these announcements. With respect to the rate reduction, while the benefit goes to everybody, if you are in MSME sector or large business conglomerate, everybody will get that benefit. But I think what is more encouraging to see is that the government has extended the deadline of procurement from unregistered dealers under the reverse charge, and that extension has happened till September of 2019. So I think those are the provisions which would benefit the MSME sector very much.
That's the view coming in on the MSME sector and the advantages that they can avail. Let's also, talk particularly in terms of the overall footwear industry. Abhishek, we have that rate now of 5% for shoes that are below 1,000 rupees. And, we spoke to the management of Liberty Shoes. They believe that it's great news coming in for the sector as a whole. But there's something else that they're also batting for, and that is the introduction of anti-dumping duty. How much of a game changer do you think this would be for the footwear sector? And of course, if you could just explain to our viewers what the rate reduction for or the rate changes for footwear actually implies for them.
See, I think today increasing that limit from 500 rupees to 1,000 rupees is a very, very welcome move, because a lot of these supplies of shoes, chappals and all those things fall within the category of 500 to 1,000 rupees. Even when it comes to a middle class family, a lot of their procurement pattern evidently shows that most of these procurements are between 500 to 1,000 rupees because of the quality and so on and so forth. So I think a reduction of reduced rate to that enhanced limit is a very, very welcome step which would help the middle class section. Now coming on to the anti-dumping duties, I think anti-dumping duties will have to be imposed certainly on these transactions wherein the dumping happens from countries like China. The supplies or these products are dumped below the marginal costing. There has to be a data which proves that the dumping happens. I think to save the domestic industry, to save the manufacturing which happens in India and which happens to a very, very large extent and which also helps in job creation, I think anti-dumping duties will have to be considered by the government so that the dumping from such of these countries doesn't happen in India.
All right. I hope that answer, that just gave us a little more clarity. In fact, let's hear out Mr. Adesh Gupta, CEO Liberty Shoes, who spoke with us earlier today.
Great news for the sector, because our sector is highly, unorganized, and 80 to 90% of the industry is, in an unorganized sector. As a result of which, the organized sector had to pay a lot of, tax rate, which is higher than the normal, and as a result, the competitive edge was not there. I think it's a great news, and the whole industry, on behalf of the council, I would like to thank, the finance minister for this great, relief given to the industry. The imports from China are growing rapidly, so we have also requested the government to put some anti-dumping duty that will hit, the imports and discourage the imports and will promote Make in India.
All right, there you have it. A gift to the sector. That is how Mr. Gupta describes it. Well, I'm letting our viewers know that if you have queries, comments on GST and the tweaks made, our phone lines are open. Please feel free to dial in. Abhishek, we have a question that's been sent in to us from Sanjeev Malhotra. He asks, what are the new tax rates for hotels? Does this mean that booking hotel rooms online will now command a lower GST rate? And yes, there have been some tweaks and revisions in order for GST that the rack rates command. Can you tell Sanjeev what this means? What is going to happen the next time we go online and book our rates for hotels?
So yes, I think the hotel sector was struggling because of the artificial valuation being fixed on the declared tariff, which means that if the hotel declares the tariff of, let's say, 10,000 rupees, but the ultimate price which it charges to the customer is only 5,000 rupees, and that could be for different reasons, whether these are all those SPG related properties booked through the app, or these are booked by the online portals or through the intermediaries and so on and so forth, or there is any bulk discounting which happens, or the corporate discount. So in a lot of cases, what used to happen was that the declared tariff was much higher than the actual price charged to the consumer. And what was happening because of the provisions in law was the tax base to calculate the GST was on the declared tariff. So I think it was impacting the entire sector in a very, very negative way. The GST Council has come up with the solution to treat these supplies at par with any other supply, which means that at the price charged, which is nothing but the transaction value charged to the consumer, or in simple words, the price recovered from the consumer would be the actual price at which the GST would be levied. And I think that's the correct way to tax a particular transaction. under the GST regime, and removing these supplies from the exceptional category of imposing tax under the declared tariff regime. I think this was a necessary move which was impacting in a very negative way. But yes, it is a very, very welcome step of the government.
Abhishek, pleasure having you with us over the last half hour. Many thanks for joining in, clearing out lots of doubts from our viewers, as well as giving us your views on the GST tweaks that have been made. With that, it's a wrap on the show. Thanks so much for watching.